Hello everyone, Tom from Market Zone here with a new weekly market analysis video with a recap of the first trading day of the new trading week, FOMC week. The purpose of this video is to update you with all the recent price action developments since I posted the weekly market analysis newsletter this Sunday, which if you haven't read already, you can find it at www.themarketzone.net. Hey guys, what's up? Tom for the Market Zone here. Thank you for coming back to my channel and thank you for watching this video. It's been a while since I posted the weekly market analysis video, so if you aren't familiar with the concept, I'm going to review some of the charts that I mentioned in the weekly newsletter. We're going to see if something has changed, and I'm going to explain to you the setups so you can decide if you want to trade them or not. I would like to start this video with a brief analysis of the dollar index. It's probably the most important asset right now. Dollar index is testing a weekly support zone and the PRZ of a bullish bat pattern that you can see right here. Not much has changed today, and we have a small doji, but this zone between 93 and 92, and I'm going to show you why 92 in a minute, is probably the last line of defense for the dollar's bulls. You see, if I'm going to zoom out a little bit and take a look at the weekly chart for a second, we can clearly see how DXY is testing a weekly structure zone that has been proven plenty of time in the past as support. And just below that, near 92, we have the 200 SMA line, the 200 weeks MA line, that comes as additional support in case that DXY will dive all the way down to test it here now near 92. This support line, this 200 MA line, is pretty much the bottom of the potential buy zone that I marked for DXY, for the dollar index. I expect the dollar to turn here and maybe go into a pullback move that will drive dollar index back towards 96 and towards this downtrend line that we have. The extremely bullish scenario for DXY is that it will reach all the way up to the top of this weekly trading range that we see near 100 to test it again as resistance. Basically, what this chart shows us is that DXY has the potential to continue to push lower towards the PRZ of this bullish bat, towards the bottom of this weekly structure, even towards the 200 SMA line. Today's doji pattern isn't exactly a sign of strength, it's just a sign of hesitations. The market isn't exactly sure which way to go before FOMC, which will come on Wednesday. So we may see a bearish continuation move, maybe tomorrow, maybe on Wednesday before FOMC. But as long as DXY stays inside this potential buy zone, it presents a bullish reversal setup. It presents a potential buying opportunity for those of you who think that DXY still has a chance to continue higher towards the trend line, maybe towards the 100 psychological price zone. We can see the mirror image of what I just explained for DXY in EURUSD. Of course, I marked a potential sell zone for EURUSD in the weekly newsletter this week. It includes August 2015 high. That's the spike that you see here during 2015 summer. We are coming to August 2017, 2 years later, pretty much at the same level. We have the 200 weeks MA line that comes as resistance here, unlike DXY, which was a support. Here it's a resistance, and we have a bearish crab, bearish harmonic pattern completion near 1.19. That's a potential sell zone between 1.17 and 1.19. Despite today manufacturing data, which came out below expectations, as you can see, we didn't see much price action in USD. We have a small doji, just like we saw in DXY, and it looks like EURUSD, just like the dollar, is waiting for the Fed on Wednesday and to see what the Fed has to say about future rate hikes towards the end of the year. Basically, if you want to trade this bearish setup, this potential sell zone in EURUSD, you need to wait for the price to hit 1.17, enter into the weekly potential sell zone, and then look for daily reversal pattern, 4 hours reversal pattern, whatever you use in order to trigger your counter trend entries. If you'll read the weekly market analysis newsletter, you can see I mentioned two potential scenarios, one for longer term traders that can allow wide stop loss, and one for swing traders and day traders that can maybe use the different levels that I mentioned inside the potential sell zone as potential entries. I want to briefly mention the S&P, not because there's something to update about the S&P, but still it is the main stock index in the US, and we need to be aware of the situation here. So S&P continues to float at all-time highs. The bulls continue to push the price every time that it tries to show some sort of bearish price action. The bulls are storming in, pushing it back up again. We see a small daily pin bar today, nothing to mention really. But even the VIX, which tried to wake up a little bit earlier today, it is closing near its low. So unless you are extremely contrarian, you see these levels of the VIX and you think about a potential spike like we saw here, there's really nothing to trade in the S&P. In the bearish side, if you want to buy something, try to buy bargains, not overpriced stocks. If you are contrarian, you can look at the VIX and think about contrarian trading ideas, but again, S&P doesn't show any sign of weakness right now. If you are still looking for bearish trading opportunities, selling overbought stocks, overpriced stocks, despite the bullish sentiment that we see in the markets these days, perhaps Microsoft is something that you should pay attention to. This is a chart that I mentioned in the weekly newsletter this week. Microsoft, following its earnings, reached the top of a trading channel. This is a daily trading channel that started back in August 2017, and this trend line was proven as resistance plenty of times, as you can see, and it can be a trigger for some short-term bearish reversal that will drive Microsoft back towards the 50 MA line, fast MA line, or maybe even towards the bottom of this trading channel. Just an idea, there's no really sign of weakness right now for Microsoft, but if you are looking at this technical setup, it might work. It worked in the past, it can work this time also. So bearish opportunity in Microsoft. Counter trend, you should be very cautious with the bullish sentiment in the markets these days. That's it, guys. That's this week's weekly market analysis video. Thank you very much for watching. Don't forget to subscribe to this channel, activate notifications, don't miss the next video that I'm posting. And if you want to read the full version of the weekly market analysis, you can go to www.themarketzone.net, go to the weekly market analysis tab here, and you can read this week's newsletter and previous weeks also. Also, you can find on my website my blog, the Learning Center. You can read more about harmonic trading, trading psychology and tips, price zones and price action. Lots of highly valuable content if you are a newbie or a trader that just want to sharpen your trading skills. So on my blog, Learning Center, you can read more. Lots of interesting stuff here. That's it. Thank you very much for watching. See you on the next video. Bye.